There is so much cash on the sidelines, just piles and piles of investable cash on the sidelines. A little bit of it, a little bit of the riskier cash that's sitting on the sidelines might have been starting to slowly take a look at some of the riskier stocks today. So tech was up, and that's what everybody's talking about today, that tech did well today and that was behind the market improvement today. Tesla was up today. It's a tech stock, so that would stand to reason, right? Well, let's get into the details. This is Randy Kirk. If my Wednesday show is something that you like, please hit the like button. If this is useful and helpful to you, you might want to subscribe, and might want to hit the notify button, because this week has been Robot Week. Well, actually, it's been Robot Week for a couple of weeks, and it isn't going to end. Quite frankly, I need to talk to you about robots. We need to discuss this. Tesla's robot is going to be a multi-trillion-dollar profit business. I will do a show on this probably tomorrow, maybe Friday. Watch for that show. Hit the notify button so that you'll get notified. I'm going to prove to you. I'm going to set it up. I'm going to lay it out. Then I'm going to ask you, I'm going to invite everybody that watches that show to show me where I'm wrong, that by the end of this decade, Tesla will not be throwing off trillions of dollars in free cash flow. This will be a conservative estimate. I think you'll agree. Some people think I'm just the optimist. I call myself that now on Twitter, but it's not. But really, look at the numbers. I'm going to try to just be as conservative as I possibly can. Maybe you'll want to be even more conservative than me, but the numbers are crazy. So watch for that video, and check out this morning's video with John and Scott, and several videos earlier this week and last week. If you're interested in the bot business, if you really want to start getting some knowledge about what's going on with the bots, you need to watch these shows with these experts that I've been bringing on. Okay, now let's get into today's situation. What is going on? All right. So as I mentioned, Tesla was up more than the market, because that's what it does. And then the market was up, and it was up strongly. What do I like to look at? Let's start with the bonds. Okay, the bonds are kind of flattish right now, but what I saw today, I didn't like. What I saw today was that the 2-year and the 2-month were actually going up, as the 10-year was sliding down just a tiny, tiny bit. This is a greater inversion. We don't like to see the inversion. The inversion has been going on since last July. Inversions like this, when they happen, sometimes last a couple of months, sometimes even less, and people go crazy thinking it's an absolute guarantee of a recession. Well, now we've been going for over 9 months in this inversion, and we don't have a real recession. I mean, 3.6% unemployment doesn't sound like a recession to me. Plenty of jobs, people getting paid more money than last year. Yeah, it doesn't sound like a recession. So what's really going on? I've been thinking about this and thinking about this and thinking about this and reading articles, and nobody's really mentioning this. I had a friend of mine 30, 40 years ago who made bank on the bond market, never really tried to get in his head and figure out how that was all working. But I might have just thought about it today. And maybe this is obvious to you. Let me know in the comments. You know I read your comments. You know I love your comments. Let me know if this is just obvious and I have been missing it all along. And that's, nobody else is talking about it. So here goes. If you buy a bond today, I am not an investment advisor. This is not investment advice. If you buy a bond today, a 10-year bond, paying 3.57, I don't know exactly what it closed at. It'll change over even after hours, but call it 3.5% interest. And then 2 years from now, that 10-year bond is available for 2.5% interest. Well, then the face value, the value of that bond is going to increase. So right now on a 10-year, you can lock in 3.5 plus interest rates for 10 years, which is not great, but it's not horrible given everything else. You might also already believe that inflation is under 2%. So this would be an okay return on investment for a very, very safe investment. Super, super safe. And then there's almost no chance, there's a very small chance that interest rates are going to continue up much, but there's a very serious opportunity, really obvious opportunity, that interest rates are going to come down, which will throw these bond values up. So you make money on the bond itself by selling it later. I think that's what's going on with this 10-year, way more than this inversion issue that you would normally be looking at. But the inversion issue is affecting things like the rent, what do you call it? The interest rates on cars, which we care about because of Tesla. Just saw a statistic this morning that currently last month, people paid 9% average for car loans and 14% for used car loans. That's pretty crazy. So take that as you will. That's a piece of, it's the closest thing I'm going to give to investment advice, but you shouldn't take it. It's just not from somebody who's a professional in the area, just an observer, just somebody that's watching. All right. So that, like I mentioned earlier, there's some testing of the water in the tech stock range, a little more risk on. There's a lot of capital out there, tons of investment capital. And I've talked about this on my show before. That investment capital, those folks that are holding that money tend to get itchy fingers. They're like, man, I got to get back in the market with something that's going to pay me more than what I'm getting now. Some of these guys are in competition with other people that are investing money, and they can't be showing tepid returns at the end of the year. They need to get into something that's going to give them an advantage so that people will pour more money into their funds and whatnot. So I doubt if this is the beginning of anything serious in terms of risk on, but at least it was a nibble. It was putting the toe in the water, but not ready to jump into the pool. When there's a transition back into risk, Tesla is going to go to the moon. Okay. My number for this year is 400. My number for next year is 700. And that doesn't count robots. If you're going to watch my videos on robots, maybe we're looking at a way bigger number next year, maybe even this year. So that'll be on a future video. Okay. So, but what else is going to gain? Well, everything that Cathie Wood is doing. So she has been, she was the hero 2 years ago. Everybody's talking about Cathie Wood was the most brilliant person on Wall Street. And now after this horrible drop in the market and everything that's happened, she's the GOAT. And lots of people, oh my gosh, she had her moment in the sun. Guess what? She is in the kind of stocks that people talk about in the risk business. You buy these stocks and 1 out of 10 go crazy. Well, 1 out of 10 did. It was called Tesla. And she has all these other stocks, and some of those are going to go crazy too, because they're all those kind of stocks. Well, maybe 9 out of 10 won't, but 1 will. And that's the game she's in, and she's in it for the long term. I'm not sitting here saying you should buy ARK Invest. I'm just saying that's what Cathie does. If you follow Cathie, if you understand what she's doing, it helps you to understand the entire Tesla situation. So just a thought for you, that is where the real response is going to be. Her stocks and her funds have been beaten down 75, 80%, like Tesla was. They have a long way to, in terms of going back up at some point in the future. This is for your entertainment value only. Okay. So we've already talked about the robots. Let's see. Oh yeah. So let me just say a couple more things about the robots. One is, yes, Elon has already said this will be the largest of all his businesses. I think there will only be leased or rented, however you want to call it, and therefore it'll be pure profit. The limitations of getting into the business are minimal. That's what we're talking about in some of these videos that are coming up. There's just what are the limitations keeping them from? Are there raw material limitations? No. Are there limitations on the difficulty of making metal products and plastic products that are going to go into these robots? No. Are there some serious limitations in terms of the programming that's necessary to make these bots? No. And we'll show you all these things in these videos. So I think the ramp is going to be really fast once the ramp starts. I've been saying 1,000 this year and 1 million next year. We're going to start trying to really prove that out. Okay. So watch for those videos. Next, oil was up But oil, I don't think there's anything new about oil this week. I think the good news about oil is that it came down into the 70s, and now it's back 60s. Now it's barely back up into the 70s. I think it'll probably flop around in that range. Basically, though, it's way down from last year, which is good in terms of the inflation issue, because again, oil is throughout industry. Oil touches everything. It touches transportation, it touches manufacturing, it touches plastics, and it touches, of course, all the related issues of oil with transportation and whatnot. So when oil is down, it's a ripple effect through the entire economy. Some people call it the hidden tax, that when oil and natural gas come down, it reduces your taxes. When they go up, it increases your taxes. It's not a literal thing. Please understand me. It means it's like a tax because there's nothing you can do about it. Okay. Next, housing sales came out the other day. They were actual new purchases were up a little bit, or purchases were up a little bit. That was kind of surprising for January, February. I think that's the beginning of what I would expect to see happen. I think you're going to see a normal housing market. Mortgage rates are at historically normal rates. The amount of the mortgage increase has already been taken out of the pricing. Prices are down about 15%, 20% in some markets, 25% in some, 10% in others. Some are not down at all because, real estate is always local. So, but the overall discount right now on homes is about 15%. Well, that 15% is been taken out because the interest rates are higher. And so the affordability factor has to be managed. Okay. Just like on the cars, as the interest rates went up, they needed to drop the price on the cars so people could make the monthly payments. Same thing on housing. That's already figured in. It's already done. Mortgage rates are not going up higher. If anything, they might start drifting down a little tiny bit, probably not in the spring. But anyway, we're coming into the market. We're coming into the spring market. Watch the housing. If housing is normal during the spring, that will indicate that the business is kind of normal, and we could maybe see the beginning of a new bull. It's not just housing, though. There are other issues that happen in the spring. There's other seasonal businesses. These are primarily sporting goods, home improvements, and travel. So watch the stocks that are related to those three. If those stocks are doing well, if their reporting is good, if you're hearing good things about people going and buying sporting goods and doing home improvements, what's happening with Home Depot, if you hear that travel is doing well and that airline tickets and hotel rooms are going up in price, or at least staying steady, these would all be good indicators for the market being solid going into the rest of this year. Coming up tomorrow will be the inflation numbers, the PCI. This is the price consumption index. This is the Fed's favorite index. This is the one they pay the most attention to. This is based on how consumers are actually consuming products. It's not just somebody's idea of what a market basket looks like right now. This is what's actually happening out there. If these numbers are higher than expected, then the market is not going to like that at all. Although I think the market thinks the Fed is done, or maybe one more 25 basis point move. That's what the market thinks. But if this number was really high, or 5% or higher, that's not going to be a good sign. On the other hand, if it goes below 4% into the threes, that could be a very big stimulus for the market. So watch that PCI number tomorrow morning. Most people don't pay attention to the PCI. They're all paying attention to the CPI, which is the Consumer Price Index, which is the more headline-y item that the newspapers seem to care about and CNBC seems to care about. The Fed likes the PCI, so watch for that number. Okay, I have been kind of an off subject here, but people keep asking me, oh, well, but my friend can't find a job right now. I thought you said, Randy, that there's 1.9 jobs out there. Actually, it's 1.7 now. There's 1.7 jobs listed right now available for people to take for every one person that is unemployed and looking for a job. And so I've had people say, well, gee, Randy, but I got my friends and they're looking for a job and they're not finding a job. Okay, I've answered it in the comments, but let me answer it now, because this is going to be a number you really want to pay attention to over the next few months. Does that 1.7 come down? Do we start to see that there's more closer to reality? The real number should maybe be 7.7 jobs or less than one job for every one person looking for a job. That would be historically what you would expect. As long as it's the reverse, I mean, these numbers are just crazy. It was as high as 2 and 2.1 jobs for every one person looking. That would tend to make you think there's going to be wage inflation, which is one of the things the Fed was the most worried about. Well, the wage inflation didn't happen. If anything, wage earners are losing the inflation battle. But the reality is when there is this mismatch, you would expect, everybody can just go out and get a job, the next day or in a week. There's a problem because there's a mismatch between skills and the skills required and the skills that people have. So maybe you've been laid off as somebody in construction. A lot of layoffs in construction because the home improvements as well as new building was not happening at the same rate. So a lot of layoffs in construction. Well, you're a great construction worker, but are you any good at selling cars? Or are you any good at working at a desk and putting numbers into a computer? So you understand, I think, that there could be a skills mismatch. So that's part of it. I think the bigger mismatch is expectations mismatch. So you get laid off, and now you think I'm going to get an even better job because look at the market. There's so many jobs and not enough folks. That expectation mismatch, I think, is hurting job seekers. So tell your friends that they might have to take less in terms of benefits. They might have to take less in terms of pay. They might have to move into a different industry in order to get what they're hoping for. They may have to go back and get some new skills. Expectations mismatch, I think, is a really big, you might have to move. A lot of companies now are saying, nope, you're going to have to be in the office. And those folks that were hoping to be able to work from home all the time, it's another expectations mismatch. That expectation might be going away. So we have to rejigger, we have to rethink our expectations when markets do shift. Okay, finally, let's talk about Tesla. Well, Tesla, as I mentioned, is following the macro. That's what I said it would be doing. It's been following the macro. Doesn't matter how much good news there is. I mean, there's one good news thing. I mean, it's just, if you listen to any of my friends who have their YouTube channels, Best in Tesla, Lars, if you listen to Stephen Mark Ryan, if you listen to Electric Light, anyway, I'm not going to remember all these guys, so I'm sorry that I didn't mention all of you. Dylan Loomis, I mean, listen to these guys, and you're hearing that Tesla is beating everybody in practically every European country. They're number one. They're number one by brand. They're number one in unit sales of the Model Y. This is true in China. The China numbers are excellent, and they're doing great in China. The United States, numbers are great. I mean, around the world, Tesla is blowing it out. They're doing everything that they're expected to do. Yes, the lowering of the prices is obviously a big piece of that. If you've listened to some of my other videos, I think the surprise coming up in the earnings report is going to be that Tesla cut their costs. And I know there's been a couple of videos out, maybe today even, that are started digging into that and saying, well, the cost of lithium is 50% of what it was 3 months ago. And the price of batteries, CATL, they're dropping their price of batteries. They've renegotiated with all of the car dealers over the last couple of months. Tesla had to be at the top of that list. So the cost of batteries is coming down, cost of lithium is coming down, the cost of other minerals and materials that are necessary for batteries are coming down. The cost of almost every other commodity is coming down. We mentioned oil as an example, but copper, and just go down the list, all the commodities are coming down. Well, that and labor coming down. And we know that Tesla's emphasis was going to be getting the general overhead down, and they're already the best at that in the world. So I think one of the surprises is going to be what the actual margins are come earnings day, and what the not only the gross margins on the car, but also the margins after overhead is taken into consideration. So the operating margins. And we were told by Tesla, watch those operating margins. If they can keep those operating margins at 17, 18%, if that's what comes out later in April, when earnings report comes in, the stock will respond to that. I don't care what's happening in the market. If Tesla is still showing 17 to 18% operating margins, when they do the earnings report, Tesla stock will respond to that. I am not an investment advisor. This is not investment advice. Okay. So, so between now and then, I think Tesla will continue to trade in a range, even though people keep increasing the number of expectations for this Sunday. What are the sales numbers going to be? What are the production numbers going to be? I've heard as high as 470,000 on production. I've heard as low as 419,000 in terms of sales. I'm sitting around 435 on each. It's not even, I haven't even done any digging. This is not something that I try to mince around and try to figure out. I just looked at all the different numbers that people are talking about, and I think they had this big overhang of inventory at the end of the year. So I think sales and production is going to be fairly close to the same. So I'm saying 435 of each. I could be completely off. Let me know in the comments what your number is. That'd be kind of fun. Let's see what everybody else thinks the number is going to be. I bet you our numbers are as good as anybody else's. So, hey, comment below. Let me know what you think about what we talked about today. If you liked it, be sure to subscribe and hit that notify button, because you're going to want to see some of this stuff, and you need to join Patreon. I'm putting up a lot of these videos early. My financial numbers are going up and staying up, and you can play with them. You can actually interact. So $5 a month, really, really worth it. Hey, it's been great talking to you.